Yo, this I made $1,300 day trading the Nasdaq and S&P 500 this morning. $1,340. I don't know if I said that wrong, but so this is trade recap. 4th of September. Today was a good day. I wasn't gonna trade today. I was actually trying not to trade today, because I'm up on the week. I'm up. Let's see. $4,477 on the week. So since I'm up so much on the week, I was gonna not trade today, and I'm definitely not trading tomorrow. Taking tomorrow off because there's just no point in putting more risk on the table when I'm already up this much. I was gonna stop trading when I was up like 3,000, and now I'm up 4,500. So there's no point in putting more risk on the table this week. Already off to a great start for the month. It's only the 4th of September, and I'm already up $4,500. So nothing, no reason to put more risk on the table. Today was pretty. It was a pretty obvious day, I would say. I think it was a good day. The chart is confusing, but I'll explain it. Um, but today was pretty basic. It just price didn't go as low as I wanted it to. Basically edged like my very last take profit by only a couple of ticks. So I should have. If that had hit, I would have made more like $2,300 today, but instead of half of that. But it is what it is. I went in light on risk too, but then once price started going in my direction, it became very obvious that it was gonna hit what I wanted it to hit. I added to my position, and you'll see that. So I technically took two trades, but really it was one trade idea, and then I doubled down. Originally, I usually risk 1% of my portfolio, so $500 times two accounts, so $1,000 a day. But oh yeah, that's why my realized profit for today would be 1,300. I think is what it is. Yeah, 1,300 because it's this number doubled. But yeah, let me go full screen here. So yeah, today could have been a lot bigger of a day, but you know what? It is what it is. When I doubled down on my position too, it was so low compared to my original entry. I originally entered with $500, then I added the rest of the 500. I decided, hey, I am willing to risk $1,000 today, even though I'm up on the week. Usually, start to tone it down when I'm up this high. Now I'm definitely am. That's why I'm taking tomorrow off. But $5,000 is a good start to the week, so and a good start to the month for sure. All right, let's get into it. So, as always, I start on the 15-minute time frame. Mark out Asia and London session. So, that's these whole vertical lines right here, and then market open. So we have Asia session from 8 p.m. to 3 a.m., which is when London opens, and then London session until 8:30, which is the start of New York pre-market until market opens at 9:30. Today was a super early day because we hit the draws way faster than I thought. I was extremely bearish, and I wanted to see all of this low resistance liquidity get taken out. Hold up, let me just. It's hard to not have the drawings on, but I really wanted to see these lows get taken out, but especially at least get to equilibrium and fill this huge 4-hour fair value gap. Price didn't end up getting down there. We got super, super close. As you can see, the fair value gap equilibrium is right here, and we're right there. Super close. That was going to be basically my full take profit with runners all the way down to these lows. Actually, just this first one because I didn't have enough micros and contracts that I was risking, but I know I'm talking quick. That was kind of the plan here, though. It seems like we're not going to come down and take these out, which is, again, what I had said originally was I was expecting this week to sweep these highs up here and then start to make a move back down to get all of this low resistance liquidity and these equal lows down here. This is kind of high resistance liquidity, but since there's no liquidity sweep here, I was expecting us to want to come down and take it out. I guess it's just going to be a high time frame SMT with Nasdaq and the S&P 500. But we still have these near equal lows and these near equal lows, both that haven't gotten swept. And I was expecting that, but I guess we'll just have to see where price wants to go. I can't believe that price wants to move higher. We're really just been moving up and up and up. It gets to a point where you're like, when is market gonna retrace and double check itself? I mean, we're up a lot from these tariff lows. We're talking 30%. It begs to ask the question, when is this retrace going to come for long term? But the good thing about day trading is that we can make money when it goes up and down, so it doesn't really apply to us too much, except for when we're going to have our next big buying power ready for any dip. Regardless, let's get into today's day trade. So coming into market open, we have this huge SMT from this high and these highs to NASDAQ, and then these same highs and these same highs on ES, which coming into market open had not been swept yet. So that was a huge SMT. I mark those as red just so that I know that they've already been swept on NASDAQ, but we can delete these high time frame SMT markings, just keep it in the back of your head. And then we have this high time frame draw on liquidity, kind of like a high resistance liquidity, that hadn't been swept, and it's getting swept right now, as you can see on both NASDAQ and the S&P. But we can go ahead and clear those off too, because we didn't use that in our bias this morning. So yeah, so on the 15-minute time frame, pretty simple draws, man. I mean, we'd come up, swept London lows on pre-market, London highs on pre-market. Right when market opened, we came through and we swept these London highs. These were London highs over here. We came through and swept right at 9:30, right when market opened. Exactly what I wanted to see. I wanted to see us take out at least these low resistance draws, and it happened perfectly. I wanted to take out London lows and Asia lows, so we were trading so close to those lows that I wanted market to open and immediately break structure on the 5-minute into the bullish order flow, sweep out London highs before reversing and taking out London and Asia. So what I was looking for was sweep of London highs, break a 5-minute structure as a manipulation leg, so that market makers can fill more sell orders into bullish pressure. And once we had that 5-minute break of structure to the upside, immediately I scaled down to the 1-minute time frame and looked for an entry. It happened really quickly. I think I entered literally like 5 minutes into market open, which is not normal. But since we were so close to Asia and London, and ES and NASDAQ both didn't take it out, when that happens, most of the time you're going to want to see a 5-minute break of structure in the opposite direction, and then you don't have to wait for a 5-minute retrace. You can just have a 1-minute break of structure back down to the downside, and that's enough confluence for me to target those near lows. I mean, you can target 5-minute lows too, even if you're really not confident. 15-minute lows if you're a little bit scared. And for me personally, I'll get into that, but I mean, it's pretty confident. You know that price is going to want to do that. So yeah, let's go ahead and get into that. Broke 5-minute structure to the upside. Immediately we created a 15-minute SMT in pre-market. It's not marked out right now, but you can go look at it on your own chart. And market opened, and we created a 1-minute SMT in pre-market. I'm sorry, not in pre-market, right when market opened. This red line is for news. It really didn't affect us this morning. I believe it was PMI, and it wasn't that effective. So market opens right here. We have a sweep of London highs, and exactly what I wanted. Took around 5 minutes, and that gave us our candle closure right here, right at London highs. Perfect. Break a 5-minute structure, scale down. Let's look for a 1-minute inverse fair value gap, a 1-minute 79% extension, fib extension to get that 1-minute break of structure. Immediately next candle, we inverse this 1-minute fair value gap. I enter risking $500, which is half of what I normally risk. I'm in great profit immediately, have a little bit of a retrace, and then this second entry was due to retesting this fair value gap again, and we created a 1 minute SMT. That 1 minute bearish SMT was really what made me enter a second time. And you are probably looking at this and wondering, why did I go for a second entry at a 1 to 0.5 risk reward? I didn't. That was not my original plan. Like I said, I wanted to see this hourly fair value gap get filled, and it just didn't happen. So my main take profit was indeed right here, which was only a little bit of ticks away, and yeah, it's around a 1-to-1. And then I would have had move stops break even, had runners down to these lows. But my main position was this entry up here. So just to clarify, but yeah, great profit. First take profit was at this pre-market low right here, and then London low took off the majority of my position, and then Asia low took off the rest of my position for this trade. And that was a beautiful trade. A 1 to 2.6 gave me great profits on the day. Again, only risked $500 when when most of the time I am risking $1,000. Yeah. So then we created this 1 minute SMT divergence with the S&P 500 with these highs and this lower high, and then this high and this lower low. We can get rid of that. And then I entered again off of, fortunately, a very deep, black, thick, long candle down here, really close to my first take profit. I was questioning not entering again. There was really no point, but I did. I was confident on that 1 minute SMT that we would want to at least fill this hourly for value gap and then potentially take out these lows. As you can see, it didn't happen. Once we had Asia lows, I moved my stop to break even. So really, the stop was right about there at break even, and that was my trade today. Some great easy price action today. It was super obvious where price wanted to go. You just need to be aware of these 5-minute breaker structures, and that a lot of the time they are a manipulation leg. And sometimes you don't need to wait for a 5-minute retrace to confirm your bias. If it is a 5-minute manipulation leg and you are fully aware that price needs to go out and take out London and Asia session lows before we can push higher, you don't need to wait for a 5-minute retrace or a 5-minute break of structure back down to the downside. That 5-minute break of structure to the upside is manipulation leg. I'm going to delete that break even trade. This is a clear manipulation leg. We broke 5-minute structure at 9:25 right before pre-market, and then when pre-market opens, we shoot up, take out London highs, and immediately see sell pressure. That should be a signal to you that we're going to want to come back down, take out London and Asia lows before moving higher. So that's what the trade was today. The SMT just aided in my interpretation and confirmed my bias, and I added one extra position, but it really didn't do anything for me. Today we ended up with just the $500 risk for about a 1 to 2.5, which is why this number now makes sense. If you think about that, a total for $1,400 or $300 trade today, 1,000, whatever that math is. Yeah. So really good day, pretty easy. That's about it. So pretty simple day. I'll catch you guys. Peace.